Smart young investors are not just surviving the 2025 recession, they're actually thriving, and I'm sharing the secrets behind their success. A lot of experts are saying that the 2025 recession is going to be one of the toughest economic downturns in recent history. And as a young investor, you're probably thinking, should I be worried? The answer is yes, you should be informed, but you shouldn't be worried. With the right strategies and mindset, you can not only weather the storm, but actually come out on top. The truth is, recessions are a natural part of the economic cycle, and they can be a great opportunity for young investors to build wealth. But in order to do that, you need to understand how to navigate the challenges that come with a recession. That's what we're going to talk about today. So let's dive in and explore the secrets behind successful young investors who are thriving in the 2025 recession. I'm sure you've heard all sorts of scary stories about investing during a recession. You know, things like, you'll lose all your money, or the stock market is too risky. But the truth is, most of these fears are based on misconceptions. Today, I want to address some of the most common fears and misconceptions that young investors face when it comes to investing during a recession. One of the biggest fears is that the stock market will crash and you'll lose all your money. And it's true, the stock market can be volatile during a recession. But the key is to have a long-term perspective and to diversify your portfolio. Another fear is that you'll make the wrong investment decisions and you'll end up losing money. But the truth is, making mistakes is a natural part of the learning process. The key is to learn from your mistakes and not be afraid to take calculated risks. Some people think that investing during a recession is only for experienced investors, and that young investors shouldn't even try. But the truth is, anyone can invest successfully during a recession with the right education and guidance. You might be thinking, but what if I don't have a lot of money to invest? The truth is, you don't need a lot of money to start investing. You can start with whatever you have and build your way up over time. Another misconception is that investing during a recession is all about speculation and trying to time the market. But the truth is, successful investors focus on building a solid foundation, diversifying their portfolio, and holding on to their investments for the long term. You might be thinking, but what if the economy doesn't recover? The truth is, economies have always recovered from recessions, and the 2025 recession will be no exception. The key is to have faith in the economy and in your own investment strategy. Some people think that investing during a recession is too complicated, and that you need to be an expert to do it successfully. But the truth is, anyone can learn how to invest successfully during a recession with the right education and guidance. You might be thinking, but what if I'm not good with money? The truth is, investing during a recession is not just about being good with money, it's about being smart and strategic. Another misconception is that investing during a recession is only about making money. But the truth is, investing is also about building wealth, securing your financial future, and achieving your long-term goals. So, now that we've addressed some of the common fears and misconceptions, let's talk about some strategies that smart young investors can adopt to leverage the 2025 recession. One of the most important strategies is diversification. Diversifying your portfolio means spreading your investments across different asset classes, sectors, and geographic regions. This can help you reduce risk and increase your potential returns. Another strategy is to invest in recession-proof sectors. These are sectors that tend to perform well even during a recession, such as healthcare, consumer staples, and utilities. You can also take advantage of market downturns by investing in high-quality companies at discounted prices. This is a great way to build wealth over the long term. Some smart investors also use dollar-cost averaging to reduce their risk. This involves investing a fixed amount of money at regular intervals, regardless of the market's performance. Another strategy is to focus on dividend-paying stocks. These are stocks that pay out a portion of their earnings to shareholders in the form of dividends. Dividend-paying stocks can provide a steady stream of income, even during a recession. You can also consider investing in real estate investment trusts, or REITs. These are companies that own and operate income-generating properties, such as apartments, offices, and shopping centers. Some smart investors also use index funds, or ETFs, to diversify their portfolio and reduce their risk. These funds track a particular market index, such as the S&P 500, and provide broad exposure to the market. Another strategy is to focus on companies with strong financials, competitive advantages, and a proven track record of performance. These companies tend to be more resilient during a recession. You can also consider investing in companies that are leaders in their industries, such as tech companies, healthcare companies, and consumer goods companies. These companies tend to perform well even during a recession. Some smart investors also use options trading to hedge their bets and reduce their risk. Options trading involves buying and selling options contracts, which give you the right to buy or sell a security at a specified price. Another strategy is to focus on international investing, or investing in companies based outside of your home country. This can help you diversify your portfolio and reduce your risk. You can also consider investing in companies that provide essential services, such as utilities, telecommunications, and transportation companies. These companies tend to perform well even during a recession. Another strategy is to use tax loss harvesting to minimize your tax liability. This involves selling securities that have declined in value and using those losses to offset gains from other investments. Some smart investors also use charitable giving to reduce their tax liability and make a positive impact on their communities. This involves donating securities or cash to charitable organizations and claiming a tax deduction. Let me share with you a powerful case study of a young investor who thrived during a previous recession. Her name is Sarah, and she was just 25 years old when the 2008 financial crisis hit. At the time, she had just started her career and was working as a financial analyst. She invested heavily in the stock market, using a combination of dollar-cost averaging and dividend investing. Despite the fact that the stock market crashed in 2008, Sarah's portfolio continued to grow, and she was able to retire by the time she was 35. She attributes her success to her disciplined approach, her long-term perspective, and her willingness to take calculated risks. Sarah's story is a great example of how young investors can thrive during a recession. By having the right mindset, the right strategies, and the right support, you can overcome any obstacle and achieve your financial goals. So, to recap, the key strategies for thriving during the 2025 recession are diversification, investing in recession-proof sectors, taking advantage of market downturns, and having a long-term perspective. By following these strategies and staying focused on your goals, you can not only survive but thrive during challenging economic times. Thanks for watching, and don't forget to comment below with your thoughts on investing during a recession. If you're new here, consider subscribing for more content on investing and personal finance.